Bitcoin is at a major crossroads right now. We're seeing some really scary-looking chart patterns, literally billions of dollars moving around in the shadows, and, honestly, a whole lot of confusion. So what is actually going on? Let's break it all down.
All right, let's just dive right into the deep end. We're going to start with the one signal that's on every single investor's mind, a technical pattern with a very, very dramatic name. We're going to figure out if this is a reason to run for the hills, or maybe, just maybe, something else entirely.
So first, we gotta set the scene. The week didn't exactly kick off with a bang. It was more like this palpable sense of nervousness that just kind of rippled through the market the second things opened.
Yeah, right out of the gate, we saw some serious downward pressure. Bitcoin's price dipped below that $64,000 mark, and yet it bounced back a little, but that initial drop, it showed some pretty clear cracks in the market's confidence.
You know, the price action is one thing, but to really understand the market's mood, you got to look under the hood. And we're going to do that by looking at a couple of key technical signals. These are going to give us a peek at what's happening on the big exchanges, like the CME and Coinbase.
First up, we've got something called the CME Gap. Now, think of it like this. The traditional futures market, well, it closes for the weekend. But crypto, it trades 24/7. So when that futures market reopens on Sunday, there's almost always a price difference. And that leaves a literal gap on the chart. And here's why traders are completely obsessed with this. Historically, the market has this almost gravitational pull back to these levels. It ends up filling these gaps 95 to 97% of the time. I mean, that is a statistic you just can't ignore.
Next up, we've got the Coinbase Premium Index. This is a fantastic way to check the pulse of U.S. investor sentiment. So if the number is positive, it means U.S. buyers are getting aggressive. The bulls are in charge. But if it's negative, it means the sellers, the bears, are taking over.
And right now, well, the data is pretty darn clear. The index has been consistently negative. The really crucial point here is that this shows sustained selling pressure coming from the US market. It's signaling a much more cautious, kind of risk-off attitude from those investors.
Okay, time for the main event. The pattern that has got everybody talking. The dreaded death cross. So the big question is it really as fatal for the market as its name makes it sound?
You know, if you were to crack open any trading textbook, it would tell you this is a classic top-tier bearish signal. It's supposed to be the thing that marks the end of an uptrend and the start of a long, painful downturn. On paper, it is very bad news. But, and this is a huge but, here's the fascinating twist. When you close that textbook and you look at what's actually happened in Bitcoin's history, the story completely flips. The last 3 times we saw this scary pattern, it didn't signal a top at all. It marked the exact bottom right before a massive rally.
I mean, this slide's rear-view mirror really says it all. The death cross is what we call a lagging indicator. It's just confirming weakness that's already in the past. It's not predicting future doom. Think about it. The last one was just 6 months ago. And what happened right after? A new all-time high.
So if the charts are telling one story, but history is telling a completely different one, what are actual people doing? And more importantly, what's the big money doing right now?
Well, betting markets like Polymarket give us a really raw look at what people actually expect is going to happen. And look at this. The majority, 61%, are putting their money on the price hitting $60,000 next. Only 20% are betting on a rally to $80,000. That tells you that short-term caution is definitely the mood right now. But while the average person is feeling a little cautious, the whales are on the move. We've seen these huge amounts of stablecoins shifting around, starting with this absolutely massive $1.5 billion Tether transaction.
And that was quickly followed by another huge and actually much rarer $1 billion move in USDC. You just don't see transactions this big every day. This really suggests that major players are positioning their capital, getting their dry powder ready, possibly for some very, very large buys.
And then you've got one of the biggest players of all, Michael Saylor, who is basically shouting from the rooftops that he's buying this dip. His quote frames this volatility perfectly. He's saying this isn't a crisis, it's just the expected turbulence you feel when you're on a rocket ship.
So let's tie all of this together. What have we actually learned? Okay, first, the market is definitely feeling bearish in the short term, no doubt about it. Second, that so-called death cross has actually been a buy signal for Bitcoin in the past, not a sell signal. And finally, while retail traders are pretty nervous, the whales are moving billions of dollars. getting their capital ready for a big, big move.
All of this leaves us with one critical question. As all these fear indicators are flashing red, is the market going to follow the old textbook rules, or will Bitcoin once again write its own? If you found this video helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment link. See you next time.